to me, cars are for driving, sneakers are for wearing. Explain why I would want to invest in collectibles. What is it about these that makes it an interesting investment theme?
Yeah, first and foremost, apologies on the delay. Can you hear me good on your side?
Yep.
Perfect. So I think that the way we think about it is you have these intangible and these tangible elements of any investment. So when we think about collectibles in general, I think that you have this strong emotional connection. And at Rally, we've always looked at that as kind of a passion-led investment. That's how we've always described it. And the idea is that, we have a great collection of things on our platform, for example. And that's everything from classic cars to baseball cards to political memorabilia, all these things that elicit this great emotional response. But they've had these incredible returns over a long period. It's just been sort of for a very small group of people been able to access the liquidity in those returns. So we look at two things whenever we look at an investment. It's one, the track record of appreciation over time, which a lot of times for something like a classic car, as you know, if you're thinking about cars from the 60s and the 50s, even on our platform, you have decades of return history and decades of sort of history of an individual vehicle. The typical lifespan of a publicly traded company right now is somewhere around 12, 13 years. So when it comes to sort of the history and really looking at everything that's happened to this asset, we have a much longer track record for a lot of the assets in our platform. The other side of it is that the way information travels right now, the last 5 years, 10 years, 5 years specifically, the ability to understand exactly what's happening in the space around any of these collectibles has grown dramatically. So whereas for a publicly traded company, you're looking at something where it might be a ticker symbol and there's some speculation around it and there's the potential for forward earnings and you're looking at a million message boards. The information around the 1955 Porsche Speedster is consolidated with a group that truly does care about it. So the ability to access that information is way more prevalent when it comes to some of these collectibles than it is for publicly traded companies. So factor all that into the fact that this asset class has typically outperformed and has been pretty non-correlated to general equities markets. And it becomes a really interesting investment for somebody who's been on the sidelines watching those prices move for the last 10 or 15 years, but hasn't been able to get involved because the price points are so incredibly high. So that's kind of like the factors that play into the way that we look at these investments. And I think the way a lot of our investors look at them as well.
So take us through the process. A car comes into your collection, hypothetically. How do you take a physical object like a car and turn it into an IPO where investors can buy individual shares?
Yeah, so on Rally, every week, basically, we're running IPOs, and they're basically SEC qualified mini companies. So we leverage Reg A, which was sort of birthed out of the Jobs Act, which was, a lot of it was made for startups and some of the Indiegogos and the crowdfunding websites that allow for non-accredited investors and accredited investors who aren't necessarily as savvy with the private markets as others to get involved in unique investments. So we're leveraging that same law and the same regulation. We take a car, it might be, call it our most recent Saline S7, the 2003 Saline S7, which is this supercar that has a huge enthusiast group, but regular investors might not know what it is. Once we sort of target exactly what we want, we have an 18-point checklist that goes into any investment. And that looks at things for a car like mileage, provenance, history, returns, and then it goes into a specific vehicle when we think about, how many owners and some of the specifics around it, like anybody would if they were buying a new vehicle. And then we look at some of the external factors. We make sure that this is something that is going to be relevant and in the conversation for anywhere between, 1 to 5 years in the future. So that means auction comps, private sales that are starting to show up more, any events around that vehicle or sort of pop culture references that are relevant at the time. That turns into this sort of checklist and a score. And if that score is high enough, it's something that we know we want to acquire. Sometimes we'll do that if we can buy opportunistically, where we'll pay out of pocket. If we find that there's a collection or an estate sale or something where there's a majority of those assets or things that we want, we'll buy those. We'll break out the individual assets. We run them through the SEC for qualification. What we get back is a vehicle that is essentially one company with one balance sheet. We have one cap table on it. It has its own sort of use of funds. We have a little bit of money for ongoing maintenance, and that becomes the company that IPOs. It's in a 90-day lockup after the IPO period is done. After that, we maintain a secondary market through registered broker-dealers with true bid-ask and one clearing price end of day every 30 to 60 days to get liquidity. And then we're also always sort of building this great collection and making sure that, we have that museum quality collection where if you wanted to buy a Saline S7, there's a good chance we have the best version. So what happened with that specific IPO is that as soon as it was over, we had a qualified buyout offer for this $375,000 vehicle for $425,000, and that was a quick return for investors as soon as the IPO was complete. So we're always kind of fielding those offers as well.
So really, you operate more as an exchange or a platform where people can meet to buy and sell these. We've seen that with real estate. Pier Street is one example. We've seen that in a variety of different areas. How far do you want to expand this beyond? So you do cars, you do watches, you do memorabilia. Are you going to expand this to fine art? How broad can the focus of this become?
I think it can be and it should be everything. I think the way that we've always looked at it is that, when you think about cars, and I know people that have these massive collections. So, fund managers that might have, be liquid for $100 million and 10% of their net worth is in vehicles that they might never see.
Right.
But at the same time, like we have on our platform 18 and 19-year-olds who might not have millions, they're thousandaires, but they understand everything about the vehicles that are in that fund manager's collection. They might know more about it than those people do. So we want to sort of make sure that those people have access to all the things they care about. And whether that's completely aspirational or it's something where they've seen the auction results and they're behind the velvet rope, being able to do that with no minimums and not have to come to the table with millions of dollars and all the connections is important to us. And for me, I went to art school and art has always been a huge part of my life. For me, it was in the beginning hard to understand what we would do with art here when we were doing cars at first. But as we started adding all these other assets, it's all art in some capacity. Mm-hmm. It's all art that has a lot of times a great cycle of appreciation, a lot of interest from these huge enthusiast groups that don't have access. If we can give somebody access to something that has a strong history of returns and might not have been accessible, that means everything. And that's tangible assets, it's intangible assets. We're moving quickly right now into music rights and some of the cash producing assets. So the future for us, I think, classic cars in our DNA, collector cars will always be a part of it. But we look at the whole world as investable. We want to give everybody that opportunity on Rally.
So let's talk a little bit about who your clients are and who backed Rally Road as when it was an early stage venture. Who were your financiers?
Yeah, so early on, it was a little bit hard in 2016 trying to explain this to everybody where that cars are a depreciating asset is not always true. The best examples and the ones that have the most sort of relevance and that are the rarest and are really made from scratch by hand are the ones that tend to appreciate. So explaining to somebody, that cars are not a depreciating asset if you find the right ones was tough. But once we sort of started to explain the big vision for this platform and the idea that, what Robinhood is to equities and what Coinbase is to cryptos, what Rally was going to be to alternative assets, a few people got it. One of those people was Howard Linsden at Social Leverage and the team over there. Gary and Tom have been super supportive from day one, and they came in with one of the earliest checks and kind of saw this being the marketplace that it's growing into today. After that, once we had sort of a bunch of the finance group on board who understood the regulatory component, and that was like the founding group at Acorns and some of the team from Betterment, the people that really have been through the whole process start to finish were super supportive early, and they're on our cap table. Then we started thinking about what this was going to be. And we always knew that having this be a true consumer product that looked and felt and acted like all the apps that you use for e-commerce and the things that you buy on was going to be really important for us because we knew our user base was going to be the enthusiasts, not the diehard collectors and not the purists. So our A round was led by Upfront Ventures, who, Bird and Parachute and Goat and some of the real sort of consumer marketplaces that are really starting to bubble to the top now. And now this most recent round, we brought on a bunch of new strategics who are going to help with the community aspect and sort of some of the bigger partnerships. So Porsche came in on our most recent $17 million round a couple months back. Alexis Ohanian, the founder of Reddit, came in. He's been super supportive from day one, a car collector and somebody who understands this marketplace. Some of the earlier investors all followed back on. So Relay Ventures from Canada and Rev, who is one of the biggest Ferrari dealers in the country, has been in since the earlier round. So really now we're at a point that when we think about the future of this business, it's about not just the collections of the past, but of the future as well. So you have Porsche, who, when they put a 918 out, they put out something new, and it's you got to be on that list. For us to potentially get a spec and get a version that's made for our investors is kind of where we're headed with this platform.
Really, really intriguing. I know there are a number of one-offs. If you look at some of the recent Aston Martins, it's a run of 50. You look at the recent Lamborghinis, it's a run of 20. What was it? The Centera, I think, was 25. The Lamborghini.
Yeah, under 50.
I mean, that is a really, really small list. That scarcity creates a whole lot of value. Can you see that same sort of scarcity taking place in other areas? I know if you look at the really high-end watch world, horology has gotten crazy, and I keep seeing $200,000, $300,000 watches with a run of 10 or 20 being sold. Is that the direction you're going to move in the space with watches, or is it really just here's a way to buy a $30,000 Daytona white gold Rolex, only you're buying $1,000 of it or $100 of it?
Yeah, it's the right question. I think it's any space where you have that huge enthusiast group and a small amount being produced, but also enough momentum and enough demand side to create from scratch. That's always something that we want to be able to do. So with watches, you have some of the more sort of niche, what are looked at as the niche producers, that have great name in the space, that are doing it at a really high level, the FP Journes of the world and a few others, right, where it's reasonable to think we would have that on the platform in a way that we work with the producer from scratch. Walking our investors to the point that they completely understand it, because our average investor is around 28 years old, and there's somebody who might come in for a Ferrari Testarossa, but they'll take that journey with us into watches. We have to do the Daytona first, but getting to a point that we get to the more esoteric and build from the ground up and make it original is where we're headed. And we started to do that with Topps, who we partnered with most recently, to do our own set of cards that are specific to our user base only. And we're starting to think about that for all asset classes, not just cars.
So you mentioned the Jobs Act that was circa 2004, 2005, something like that.
Yeah, give or take.
What was the regulatory process like to get approved for this? I know the Jobs Act was supposed to make it faster and easier for non-accredited investors, but I have to imagine to me, that sounds like a torturous process to get approved. What was it like?
I would never call regulation torturous, because I've been on the wrong side of that. But that being said, there were some roadblocks. I will say that. I think that when we first built this business and we thought about what the first IPO was going to be, we thought the hardest part was going to be sourcing that asset. So the first asset we ever did was a 1977 Lotus Esprit S1, which from a design perspective is a really important car. It's a little more esoteric, but at the same time, it's also the muse that Elon Musk used when Elon Musk created Tesla. It was all around old Lotuses. But we looked at that at the $77,000 IPO. Once we got it, we were ready to run the IPO and build everything out. It was around an 18-month process to go through the regulatory process, and that was a lot of conversation with the SEC and our lawyers and the group that approves all these offering circulars to make sure they understood exactly what we were doing, because it was brand new at the time. So 18 months, give or take, start to finish. But once that was done, the template moving forward is a little bit easier to plug cars into. So what was 18 months to get the offering approved and probably 4 months to run the IPO and get it completed is now around a 10-day process with the SEC, and we're selling out in minutes on these IPOs. Wow. So a lot's happened in 4 or 5 years, but again, like anything else, it's baby steps first, trying to really articulate exactly what's happening, and for everybody involved to understand it was really important for us.
What about having the ability to sell shares after the 90-day lockup process? You're working with a broker dealer, which is going to be both FINRA and SEC regulated. Was that as long a time process to get that approved, or once you had the IPO process down, the second half became a little easier?
Well, a little bit easier in that they kind of understood what we were doing. And once we instituted the secondary market, we had a little bit of a reputation of doing it the right way, I think is kind of the way I would put it. So after a year and a half or so of good reviews and the SEC started to see way more of our offering circulars and understanding where we were going with the platform, seeing some of the other asset classes, the amendment to get the secondary market piece completed, it wasn't 18 months, it was a little bit quicker. But at the same time, I think we already had the building blocks for what would be that secondary market. And we were doing it the right way. We're working with the infrastructure partners and the broker-dealer partners who had great reputation as well. And we didn't do it in a way that was going to be this never-ending continuous market, crypto style. It was really buttoned up in a way that provided as much access to bids and to asks, but printing that one price end of day, kind of similar to a Dutch auction model. So we've always looked at what we do as sort of the very beginning of where it will end up. And we did this the same way that, the chalkboard was on the stock exchange, as best we could to match up as much as possible, and then end of day transact. So we did it in a way that was very much baby steps. And now as you start looking to the future and what will potentially be a continuous market, it's a little bit easier to have the conversation now that we've done it in a sort of a rudimentary way to start, and getting to a point that it goes full continuous is a little bit easier.
So you're hiring kid runners with little sheets of paper to take it to the guys with the chalkboards? I mean, that's literally how it was done.
We have a small museum here in Soho that's obviously not open right now, where we have there's an 82 Aston Martin down there right now, and like Babe Ruth signed baseballs and all this stuff. But when I started thinking about the build out of that space, I wanted it to be like, the pit on Trading Places at the end of the movie. I wanted it to be crazy and everyone running tickets. Right. And so if we can get to that point and do it in a meaningful way, I think it would be a great thing for the neighborhood, and everybody would be really excited to see it. But yeah, maybe.
So let's talk about provenance a little bit. With the 82 Aston Martin you mentioned, every car gets a VIN number and it gets registered with the state where it is. Pretty much you have a chain of custody that's easy to track. So if it's literally James Bond's Aston, we know it. I've always been a little, let's call it, skeptical about certain collectibles. How do you do the research that this is really a Babe Ruth signed baseball card? I always just picture, some collectible shop. There are, child labor in the basement. They're just signing, the Tom Seaver one after another. How do you make sure that what you think you're getting is actually what you're getting?
Yeah, so, it's a good question. With cars, you're right. There's something like our 55 Porsche, the doors are stamped and every single part has its own VIN number, and that's on there. For something like a baseball card, it's also a little bit easier because PSA, who's one of the authorities, and SGC and Beckett and some of the others, they make sure that it's almost like a blockchain-esque system where they keep the ledger, but at the same time, there's a VIN that's associated with that car from day one, and so much of it tracks back to one or two people because somebody held on to it for so long. So you get original receipts a lot of the time. We stand behind everything that we put on the platform, and everything is insured up to the most recent trade. The way that we look at validating some of these other asset classes, when we can, and for something like a Michael Jordan item, that's a little bit easier to authenticate. If it was that Mike Seaver item or something that's not the superstar legend where something's been held on to forever, like our Heisman Trophy, for example, is 1 degree removed from the family. So anytime that we can kind of have that degree of relevance and provenance and story to go with the asset, our Honus Wagner card is one that's been, our specific card has been covered extensively in every sort of publication because it came from this very specific monastery. It has a very specific story. So anytime we can get, provenance for us is not just the chain of custody and the check marks on that, because we always look for that. We always make sure we have every receipt along the way and multiple levels of authentication from the powers that be, from the most notable names in the space, whether it's a PSA or a Steiner or whoever else for sports. But we want that story to track back in a way that the people that are involved in it, a lot of times we'll get the quote from them, we'll get the story direct from them and make that part of how we sell this asset.
So you mentioned the Jordans. I know he signed a bunch of his, the first series, the Michael Jordans, the black, white, and reds that were in the Bulls color. Over those years, he must have signed, countless pairs of sneakers. How do you make sure that what signed Michael Jordan is actually something that Michael Jordan signed? And I want to rephrase this, have you guys sort of elevated a tranche of collectibles that are not just collectible, but uber collectible, multiple verifications, and this beyond reproach? It sounds like that's what you guys are doing.
Yeah, it's definitely the latter. So like on Friday, we have a rookie worn pair of Jordans that are going live on the platform, $250,000 IPO. It's one that's been photo matched. It's got multiple levels of authentication from 2 different groups. It's also one that was only passed through 2 owners' hands, and most recently through a major auction house who did a bunch of the diligence to ensure. And that's something that goes down to the literally the enhanced images that are matched up against one scratch to the one that we have right now and matched to a specific game. So if we can't get that, then it's typically something that goes into the maybe pile until we have better authentication or better verification. So we're trying to put together like the world's best collection, and that means going through the authentication process to find the items that have that best authentication along the way as well. So when you see something on our platform that looks expensive, a lot of times what we're trying to do, similar to how it is with cars, you want best in class, the best provenance, you want best of everything, because when it's time to exit these assets, the most expensive stuff is typically the best, and we want to make sure we have the best and have the best track record along the way as well.
So I only have a couple of more minutes. Let's bring it back to cars. What's hot today? What's not all that hot? And what do you think is undervalued?
I think it's funny that, and obviously this is not investment advice ever. I got to put that disclaimer out too. So what we've
by the
seen,
way,
at least,
stop
and this
and
is
think
true,
about.
I think across all asset classes.
Yeah, stop and think about this for a second.
What was that?
Think about this for a second. Someone asks you, "What's a hot car?" You have to do an investment disclaimer.
I mean, this is something it's so ingrained in my conversation. I do it with family by accident. You know what I mean? So, like at Thanksgiving, I'll say that 25
Pass
times.
the gravy. This is not investment advice. I got it.
It's not investment
All
advice.
right. So, not investment advice.
Potatoes,
What's a hot car that may appreciate in the future?
I think that what we've seen, at least on the platform, similar to Michael Jordan, is that 80s era, 90s era, sort of the nostalgia, but also because so many of those cars, and we've talked about this, were driven. So to find what I would have never guessed, which has happened on our platform, is like the rarer 90s era Mustangs, the 5.0s that were like one of our best performing assets on the platform is a 1990 Mustang LX, the 7-Up edition, which was part of a giant college basketball giveaway. It's up 140% this year.
Really?
And it's one that also, when you start seeing it go to auction, that and like the Grand Nationals and those kind of like really the muscle sort of 90s era American cars that weren't necessarily looked at as like design icons. So many of those have 160,000 miles on them and are essentially junkers. To find one that was barely driven is something that is rare enough and has enough nostalgia with the 35-year-old who now is making a little bit of money and wants to get back to that childhood piece. Those are the ones that right now on a percentage basis we're seeing the biggest gains in. The stuff that's kind of the blue chip, and that's like the 50s era Porsches and some of even the 70s sort of Ferraris and the early 80s Ferraris, some of our Testarossas and the piece that we have on the platform, they were treated well. Many of them weren't driven. So for us, when we look at like a Testarossa, which is one of my favorite cars and one that I hope to own, one of the best examples, one of the ones we have on our platform one day, for us to get one that's not red on tan is always important. So our two best performing Testarossas, one is the Prune Metallic, which is a 104 example with the flying mirror in 85. Another is a 90s era in a shade of blue that was just super rare, and one that now, you know, the 40-year-olds with money are starting to come around to think that you don't have to have a red Ferrari from the 80s. You can have one that's a little bit more unique, and those are the ones we're starting to see a little more movement on as well.
So you hinted at this, but for our final question, let me ask you this. If you could pick any car you wanted in the world to have in your own personal garage, what would it be?
It's going to sound weird, but this is like a nostalgia question. I'd probably get like a pristine IROC Z from like what I remember growing up in Brooklyn and seeing like one or two in the neighborhood. Sure. And just from a nostalgic standpoint alone, I'd get like a 0 mileage version just to have in a garage.
Right. That was a giant car in Brooklyn. That was Flatbush.
It was huge. That meant you made it.
Right. That was a ready market for that. Well, Rob, this has been really interesting. Thanks so much for being so generous with your time and so forthcoming about everything. I know this is going to be made available later if anybody wants to listen to this again or share it with somebody. And thanks so much for coming by. Rob, always a pleasure.
No, likewise. Thanks for filling some of that gap too. I apologize for being
tardy. Technology, fun with that.
That's how we're going.
All right. Take care. Enjoy the rest of the day.
Thanks so much.